Cathie Wood just dropped a bombshell for what will become the biggest industry in mankind, which is not EVs or solar. It's actually something that's much more important. Prices in this industry are declining by 68% per year. Nothing is even remotely close to the industry that Cathie is talking about. This video will go in depth on what this sector is, why Cathie Wood is so bullish on it, and how investors can profit on the trend. ARK Invest exclusively focuses on 5 different innovation platforms: energy storage, artificial intelligence, robotics, genome sequencing, and blockchain technology. Take a moment to guess which one is going to increase by over 1,000 times in value over the next 10 years. The platform that I'm talking about is artificial intelligence. AI might seem like a buzzword, but the industry is about to provide monumental value to society. The data I'm about to show you is mind-blowing. From 1960 to 2010, computing times increased by 2 times in speed every 2 years. Over the past decade, the trajectory has completely changed. Computing times are now increasing at a pace of 10 times per year. At this pace, computing times will be 100 times faster than the current pace in the next 10 years. The reason why this is groundbreaking is because it allows AI to improve at incredibly fast and low rates. For instance, the cost to classify 1 billion images has decreased from $10,000 in 2017 to just 3 cents. That kind of exponential decline is unrivaled. As training costs for AI decrease over time, AI will be able to compute more and more convoluted tasks. According to Stanford's deep learning benchmark, AI performance has increased by 16 times in power over the past 3 years. This kind of improvement will be apparent in almost every sector, which includes energy storage, autonomous driving, genome sequencing, healthcare, supply chain management, virtual assistants, blockchain technology, and the list goes on. This will create a significant deflationary impact on the economy over the long term. ARK Invest initially projected that AI would create $30 trillion of market value within 10 years. However, the firm recently revised their estimate to $80 trillion. That's right, $80 trillion. A substantial increase from the current market value of just tens of billions of dollars. So, how did ARK calculate this projection, and why did it suddenly increase over such a large margin? One of the primary reasons for such a humongous increase is that AI is being used in almost every sector. For instance, one company named Verge Genomics recently unveiled the machine learning model for drug development. Microsoft has been developing an AI model on blockchain so that people can build models off of blockchain data. Most importantly, the race to full self-driving has accelerated substantially. Tesla's new autopilot technology is constantly improving with new iterations and will soon be ready for a full release. Waymo has also been working extremely diligently to roll out LiDAR-powered full self-driving vehicles. With exponentially declining AI training costs, it's not a stretch to say that full self-driving will be solved within the next 5 years. Transportation is one of the largest markets in the world, and full autonomy will grow the market even more by lowering the cost to transport and improving convenience. So now that we know that AI is going to be incredibly disruptive, you may be wondering, how can investors capitalize on this growing trend? You might be surprised to hear the first method, which is to invest in big pharma and biotech. Cathie Wood usually invests in fast-growing companies with premium valuations and immense long-term potential. Contrary to that investment style, big pharma and biotech are offering a unique opportunity to capture enormous upside potential with little to no downside. A prime example of this is Pfizer, which is trading at a trailing PE ratio of 18 and a forward PE of just 10. The stock also offers a dividend yield of 3.6%, which resembles the characteristics that a value investor looks for.